Aside carrying out price analysis, one of the challenges we face as a trader is ability to make the right entry. So in this lesson, we'll be discussing the various types of entry confirmation that you need in order for you to make your trading decision, which is the decision of either to buy, to sell, or you stay out of the market. So in this video, I want you to follow the video carefully from beginning to the end. And of course, there are various confirmation which we cannot handle in a single video. So this is going to be part 1. And in the subsequent video, we are going to discuss the remaining types of entry confirmation. So in this particular video, we'll be looking at the candlestick confirmation and then the break of structure, candlestick confirmation, and break of market structure. We're going to consider these two types of entry confirmation in finding your trade entry. There are other ones. There is a divergence confirmation which you can use to confirm your trade entry, and as well there are chart pattern that you can also use as well for confirming your trade entry. So let's look at this typical scenario. This here, price is in an uptrend. We have our trend line connected, and price is giving us a series of a higher low, a higher high, a higher low, and a higher high. So this is a typical uptrend scenario. So price move to this zone. Here is our resistance. So we mark that resistance at the first movement of price. And then price came back down, gave us a support zone here. And then price went up again to retest this particular area of resistance. So when price come into that zone, what do we need to see? When using candlestick, it is advisable you make your entry on a 1 hour time frame to reduce the noise and to ensure a valid signal. And afterwards, you can look at what happened. We'll be using two candlestick confirmation. First, a bearish or a bullish candlestick, or a pin bar. And this is a typical example of a pin bar. This is not your entry. We're only using this for illustration. So a pin bar, the wick, which is the rejection part, should be 2 to 3 times bigger than the body of the candle. This is the body and this is the wick. So you can see how big the wick is. So it shows all the strength of the sellers, okay, when it's a bearish pin bar. And then when it is a bullish, it shows the strength of the buyers. For instance, you can see this is a bullish pin bar. You can see that this is the body and the wick is almost 2 times or more than the body of this candlestick. And then after that, we have an engulfing candlestick pattern. So what you are seeing here, this is a typical engulfing candlestick pattern. So this is a bearish engulfing candlestick pattern. So what happened? Price pulled back into this zone, all right, of our resistance, and immediately price pull into that zone. All we need to do is for us to make our entry. So we're going to wait for this candle to close, and when this candle close, it close as a bearish engulfing candlestick pattern from this resistance zone. And if you pay a keen attention, you will see that our CCI is almost at the level of 80, and as such you can make your entry and your stop loss is above the resistance, and of course your take profit is somewhere here. So if you were in this trade earlier, you would have hit your target by now. And then price pull back to this zone now. And where is this zone? This particular zone now is our new point of interest. So price is already in our support zone. So price in this support zone, what do we want to see? In this scenario, we want to see that we have a rejection of price back to the upside. And if you are looking at this carefully, when price came into this zone, there is a rejection. So this rejection begins to communicate signal and tendency of reversal to us as a trader. Okay, so we want to see, so we are seeing this sign that the bullish order are coming in, but this is not enough for us to make our entry. So for us to confirm this entry, we want to see either a pin bar like this, or want to see an engulfing candlestick pattern. So that is what we are waiting for. And of course, our CCI should be able to curve from this zone and then face the upside in order for us to have that valid entry. So that is how you can take advantage of your candlestick pattern. You want to see a pin bar or a bullish engulfing candlestick pattern. And if you are wondering what a bullish engulfing candlestick pattern is, this is bearish. When a candle engulfs or covers completely the previous candle and closes above or below it, it's a bullish or a bearish. That is a bearish up there. Here is a bullish engulfing candlestick pattern. Now, how do we make entry if we are to use a break of structure? Now, in this scenario, when price proves to your point of interest are those points that you have marked, either your support and resistance zone, your order block, your supply and demand zone. It can be a fair value gap, which is an improper price action. When price put to this zone, such as we are seeing, what do we do? If we are to use a break of structure, you go to your lower time frame, either your 15-minute or your 5-minute. So now this is my lower time frame. So price has pulled back down into this zone. So what do I want to see? Let me look into my 5-minute. Okay, now this is on this 15-minute. I realized that this movement of price back into this zone is not giving me an accurate order movement. I can't determine a higher high structural point. So I move to my 15-minute, and beautiful, on this 15-minute I can easily say that here now, this is my lower high, this is a lower low, this is a lower high, a lower low. Okay, I can use here as a new lower high. This is my lower low, this is my lower high, this is my lower low. So having established all of that, I can now boastfully establish that I am in a downtrend. Okay, now this is a lower high, and this low now here has been taken. So what I want to see now is the fact that this price has established a lower low. So I will want to see over time price should be able to, for instance, from this zone now, push to the upside and break this structural point. Okay, price should be able to pull and break this structural point. When it pulls from here, it breaks it to the upside. Immediately that happens, I will now mark my zone. I will mark my zone up. This price, for instance, it should pull to this upside, okay, and then break this structural point here. When it breaks this structural point, it becomes a break of structure. And once that happens, I will mark the other block again in this zone, and then I will now want to see price return from here back into my other block. I want price to return back into this other block and then give me an entry confirmation. Return to this other block, tap into it. When I break this structure now and it return here, I will be making my entry for a buy. So I'll be using this break of structure now. Price has not break structure. So but in this zone we want to see that if we are to use a structural analysis method, which is a break of structure, to buy it back to the upside, since we are in an uptrend, price will break this structural point here. This is a break of the structure, then let it pull back inside and mitigate this other block, and then we'll make our buy entry to the upside. In this video I've discussed two ways that we can find our entry: how to use a candlestick pattern and how to use the structural analysis pattern. In the subsequent video, we'll be looking at how we can use a chart pattern to find our entry combined with our divergence, and then how we can use a break of trend line as well to find our entry. And I believe you have learned something new. Do not forget to give this video a like, share, subscribe to the channel, turn on your notification bell so be the first to get notified when we upload our next video. Thank you and see you in the subsequent video.